Joining us this morning, JPMorgan's chief U.S. economist, Mike Feroli, is with us. Try to address some of this, Mike. The Jefferson bit on the tape yesterday was broadly seen as a signal. Did you read it that way?
Yeah, I did. Usually the vice chair or the vice chair nominee, as you point out, tends to speak for the board and for the chair himself. So I think that wasn't an accidental or a idiosyncratic message that made it into that speech. But I do think it was a very deliberate effort to signal that they are going to pause or skip at the upcoming meeting.
Does it completely de-risk the print tomorrow, or is there a number that could be hot or cold enough to change everything?
Yeah, that's something I'm thinking about right now. I suppose if we got a hot enough number, even with the message we got from Jefferson yesterday, that you could have a hike back on the table. You know, and certainly while I do think Jefferson was speaking for for Powell and what he said yesterday, there definitely is still a large contingent on the committee who already seems to be favoring a hike at the next meeting, irrespective of what we get tomorrow. So I suppose with a strong enough number, we could still see a hike in 2 weeks.
Doesn't matter whether we get a hike in June or July, isn't it? Ultimately, Mike, whether they're done after that.
I'm sorry, what was it?
Whether they're done after that, and what the longer term trajectory is. Is it toward cuts? Is it toward keeping it restrictive? June versus July, I feel like, is not that big of a deal when it comes to market signaling.
Well, it matters for some people in financial markets whether they hike in June and July. And certainly it's reasonable to expect cuts sometime in the future, but right now we don't see the type of weakening in the economy in the horizon that would call for cuts anytime this year. So I think it matters. Every 25 basis points may be just incremental, but over time, the cumulative tightening certainly matters for the economy.
Mike, you guys have done pretty good work trying to keep an eye on claims for the year, and basically not just claims, but the net effect of what's happened in labor for the year to date. Is it your sense that there has been a real degradation of the job market overall that maybe isn't showing up in JOLTS, for example?
So I do think the economy broadly, the labor market broadly is slowing, right? You did have an increase in job openings in April, but broadly speaking, they have been trending down. So I do think you are seeing slowing in labor market activity. It's just not happening abruptly, and certainly if it were happening abruptly, we would see probably a signal in claims. So I do think generally things are playing out as you would expect, which is to say labor market activity is slowing. It's just not happening. Certainly it's not happening overnight. So we'll see what we get tomorrow, but the slowing has probably been a little more gradual than most people anticipated, ourselves included.